strategic management accounting, we start first with the question, what is value? So value in general, it's actually, I want to hear your idea as well, because you've already done the recording. What do you think is value? Verdana, do you want to start?
Uh, it's like, adding value to the value chain in the organization, like, starting from production, distribution, and, going to the end.
Mm.
So, yeah, so this is what I understand.
Perfect. So that's one part of the value that you mentioned there, because it's about linking all the process and linking some of the departments to create something out of it. So in a broad concept, value is about combining resources together, which is in your case, combining all the production, marketing, customer service department in a manner that creates the desirable outcomes, such as growing food, generating energy, providing healthcare, building new machines. The list and the list go on. The reason why the list go on is because value means different things to different people. So we have so many stakeholders in a business, and each of them has their own definition of value. So it you cannot have a universal definition of value, because to a different person it means a different thing. For example, for you guys, value from this subject or this our section is being able to comprehend the knowledge, getting ready for your exam. Or for me, the knowledge, the value I want to achieve here is being able to give back my knowledge to you guys so you can kind of understand this subject. It's the same thing here. We have a different stakeholders, so such as shareholders, which is the investor that invests in our company. The value to them would be, how are the share price? How is the share price today? What is the share price today? Did it increase compared to yesterday? That's the ability to generate wealth for them. Lenders, their value could be something like, do we have the financial capability to meet the short-term financial requirements, such as repaying the current liability? Customer, the value would be, oh, can we produce a products that have that offer the lowest price on the market? Supplier would means, is our market or our performance strong enough so we keep ordering from them? Employees would, their value would be, are we performing well so that I can still receive my payroll this month? Or regulators would be, how are our production affecting the community as a whole? Are we maintaining sustainability requirements? Are we complying with all the environment's requirements? Or the community groups as well? Are we behaving in an ethical way that is in the best public interest? So the highlight here that you guys need to get out of is, everyone has their own definition of value, and failure to consider that people's thought, that person's thought into the definition of value will make it difficult to maintain and increase shareholder value. You cannot maintain and increase it if you don't know what they value. You said that, okay, I have an angel investor in my company, but you don't know what the value is. Is that money, or is that the all the service and the products that you guys adding to their portfolio? What's their value, right? Value creation is just as relevant in not-profit and public sector. So that's highlighting value is not just about the money, not just about monetary value. It has different meanings, intrinsic and extrinsic meanings. Value creation in contemporary organization is based on creativity and innovation. So that's the first one. Are we clear on this concept? Okay. Shareholder value. So we go into next one, we go into more details on each of these shareholders' value. So the shareholder value is generating wealth On contrast, the customer value is if we can produce a product at the lower cost than the price customer is willing to pay. Now, we want to look at figure 1.3 in more details. This is describing the organization value chain. In here, you will see that we have two set of activities here. The first one is what we call primary activity, and the second one is supporting activities. So each of these one has different departments in a standard business, as you see. So the first one with primary activities, we have operation, which is activities that so actually the definition of primary, that's why we call them primary activities, because they directly involve in the creation and delivery of a product or service. It's directly. So operation is about transforming inputs into finished products. So let's have an example so that you guys can better visualize it. We all know JB Hi-Fi?
Yep.
Right. So with JB Hi-Fi, let's see, the primary activities is going to be firstly operation, which is managing the retail store and online platform, or inventory management and products pricing, ensuring that shelves are stocked with trending electronics, games, appliance. That's called their operation. And that's directly transforming inputs, which is the product, into a finished products, which is like selling them on the shelf because they are just a retailer. Secondly, you have sale, or we have sometimes sales and marketing. So for example, in the case that is like for activities that promote and sell products to customer. So for example, in the case of JB Hi-Fi, we have like in-store promotion, or they have the price match. You know, like you can do all the price match in JB Hi-Fi. If you find a cheaper deal, they will just price match it. It's part of sale and marketing. After sale and marketing, we move on to distribution, which is the delivering the product to the customer on what channel. So, for example, with JP Hi-Fi, they can physically deliver goods to your door, or you can directly deliver to a supplier, it's B2B or B2C. They can also efficiently supply chain coordination with logistic partners like DHL, and they're just shipping to your door. That's distribution. And lastly, even when the product delivered to the customer's hands, it does not end there, because we have after sale service. That's all of your warranty, return policy, product repairs, or if there's any errors with your products, you call the customer service desk and say, "Oh, something's wrong with mine. Can you help me?" That's after sales service. So these primary activities, one way or another, you can see it's all touch base on the products itself. However, on top of that, we also have supporting activities, which are the activities that enable the primary activities to function more efficiently. So it does not directly deal with the product itself, but without it, the primary activities cannot function properly. So we have research and development. In the case of JP Hi-Fi, it can be analyzing trends in customer electronics, so they know what kinds of the procurement department can know, oh, which product should I order next. So for example, if iPhone is really soon, they need to know, oh, how are the hype on iPhone this year, and how many iPhones should we order for this year, something like that. And of course, we have our department, accounting and finance, which is always mistaken to be one of the primary activities, but it's actually the support activities. But don't worry, we're very important, so don't worry about it. It includes like managing daily transactions, store performance reports, supplier payments. Without it, who's going to pay the bills, right? Financial forecasting and compliance with public company requirements. So that's accounting. We also have human resources, which involve recruiting knowledgeable staff, in the store, provide sales training, customer service trainings to all of our staff. We have IT department and infrastructure department, which involve anything from operating and maintaining the e-commerce platform, managing the inventory system, point of sale system, customer database, anything to do with data. Infrastructure can be the head office, the leadership team that manage overall company strategy, real estate for the store, what's the rent, what's our commercial rent, warehousings, distribution hubs, and that's its support activities. So yeah, that's the relationship between the support activities and the primary activities. Are we clear on those two?
Yeah.
Okay. Right. Just let me know if you have any questions, yeah? I'm trying my best to read all the face gesture, but like it's only the best I can do, so don't be shy. Just let me know if you have any question or if you want me to go a bit slower in some of the topics, right? Stakeholder value. Shareholder wealth is a byproduct of generating value in other areas. So to create product and service, an organization will require community permission to operate, infrastructure, customer, and employees, who will only supply the effort if the wage and condition are adequate. Again, to employee wages. What are they getting paid? That's the value to them. Considering all stakeholder is critical to the organizational success. So it's not like you can prioritize one over another. It's about balancing the value that you are delivered to all stakeholders. Right. So which viewpoint should we take in when we determine value? There's two viewpoint, kind of contrasting viewpoint here between the organizational viewpoint and society viewpoint. So, for example, if I'm CFO and my company is kind of doing financially it's struggling, right? So my viewpoint would be, oh, I have to do my best to cut all the unnecessary costs. Some of it can be, oh, massive layoff. If you heard about on the news recently, there's massive layoff everywhere for especially in the tech industry, reducing the number of staff by 10%. That's my viewpoint. However, what does that lead to? That leads to unemployment, that leads to financial pressure on communities and additional stress for employees who remain employed because now they have to carry the extra tasks from all of the redundant staff. Or the organization viewpoint can be switching production to a cheaper offshore locations with lower standards of employee and environmental protections. So um, a lot of companies try to shift their production warehouse, all of their warehouse, to all the developing countries. Um, but what does that create? That will create local unemployment. That means where the company is located, they not having enough of job for everyone locally, and it creates environmental degradation in these developing countries and an increase in injuries incidents among employees who receive little protection because some of the employee protection law in those developing countries it's not even complete. Or the next viewpoint we have is a massive price discounting of key items by supermarket to gain market share, forcing suppliers to reduce prices. This is actually hotline because have you guys heard recently about how the customer watchdog is onto Coles and Woolies of how they are trying to negotiate the price and try to forcing suppliers to reduce price, especially farmers? Have you heard about these news?
Uh, Not sure.
Okay, so that is quite of a very common practice that all of these big retailers are doing, so that they trying to squeeze in any margin all of these suppliers have, so they can benefit themselves. Sure, in the organization viewpoint, you are maximizing your margin, but in contrast, looking at the picture here, what are you doing to the society? a small price reduction for individual consumer, but at the expense of producer who are unable to remain viable. So it just continue that chain because some of your suppliers or some of your producers can be your consumer. If they if they cannot survive with their business, then in the end they cannot afford your products either. So there's no balance there. Or the last one, you have selling addictive products or service, including gambling, alcohol, and cigarettes. Sure, you are just trying your best to sell all of your products, which you think is helping out. It helps to pay the bills of your employees. It helps to make the organization profitable, but at what cost? The cost is a social issue in communities and an increase in health related costs. So that's what we need to take into the strategic management accounting because as you see here, any viewpoint you take for organization, there's a consequence with the society viewpoint. So that's why strategic management step in so that it can determine the direction it will take, the industry, the type of product and service, the structure, system, process, goals, and objective, so that it balance out all the stakeholders' value, so that it balance out the organization's viewpoint, but not at the cost of the society. So it's about all the high level strategic planning and strategy here. Does that make sense? Can
Yeah.
we kind of see the contrasts here? All right, perfect. So that is the general